Joining us now from the AFR, senior writer at the Financial Review, John Keogh. John, let's start off with your story today in the paper in relation to Frydenberg cracking down on financial advisor payments. Can you give us the details?
Yeah, so the Treasury is going to push out legislation later this week that basically bans grandfathered commissions that are still being paid to financial advisors for putting, their clients into certain products. Now, under the original future financial advice laws that were watered down, Labor originally put these laws into place. The advisors were allowed to keep receiving these grandfathered commissions from pre-2013 before these laws took event. So now Frydenberg has sort of put this legislation in place. 2021, that's when it's actually going to come into place. I think this is responding to a little bit of criticism from Labor that the government's been dragging the chain a little bit on implementing the Banking Royal Commission recommendations, because this was one of the core recommendations of the Hayne Royal Commission.
And that's kind of where we found ourselves. We've got Labor saying, why isn't the government enacting all 76 recommendations right now? The truth is there's about 40 that they actually have any kind of responsibility for.
Sure.
But this is one of those areas where there really could be movement a lot quicker. Yeah,
absolutely. Look, it's a balancing act for the government because they do have, in the bureaucracy, limited drafting resources to draft new laws, not just in the financial sector or economy for Treasury, but all across the bureaucracy on national security and stuff. At the same time, also, the financial sector is saying, let's not rush these laws, let's get the detail right, we don't want unintended consequences. But you can see from Labor's perspective that, before the election, there was this mad dash by the government to look and like there was helter-skelter, that they were moving quickly on all these recommendations. And then in the first few weeks of Parliament and resuming after the election, there wasn't much talk about the recommendations they were implementing. I think Frydenberg's now trying to correct that perception that the government is being a bit slow on some of these recommendations, even though they will take time.
One of the other surprises in the Royal Commission, I think, for many observers was the targeting of mortgage brokers.
Yeah.
I wonder whether this move in terms of ongoing payments, commissions to advisors might at least see them relook at that.
Yeah, look, I think the mortgage brokers have done a very good job lobbying the Liberal side of politics to get carved out from some of the Hayne recommendations. Originally, the government agreed to stop these sort of commissions being paid to mortgage brokers, and Labor supported that. But then the government, as we know, backed down. They're still going to have a review in a few years' time and do some stuff around the margin, like a best interest duty for mortgage brokers. But I reckon the mortgage brokers, like the mortgage brokers, the accountants, these sort of groups, the property sort of industry, they're all pretty influential in helping the government get re-elected. They were out there really supporting the Liberals in their local community. They're the sort of small business sort of people that Scott Morrison actually likes. He's not so much a big business guy, he's more a small business guy. I don't think he's going to kind of turn on them after the election.
And the thing is, all these industries, they're all going to want to maintain the status quo as their first position. And so then when you put these propositions forward, they are going to look at things and say like, oh, but that would change so much and unintended consequences. But the consequences of the action now, we know, is more dangerous. And that's the kind of the argument we're hearing from the insurance groups about these unfair contract terms, which is supposed to be pushed through this week. They're saying that there could be a lot of unintended consequences from their contracts.
Yeah, absolutely. There will be a lot of lobbying of government on a lot of these recommendations by the finance sector. At the end of the day, I don't think politically Frydenberg and the government can stray too far from the recommendations, because Labor will hold their feet to the fire on that. And if there is more consumers who are hurt from the wrongdoing by these financial firms and the government hasn't taken strong enough action, then that could come back to bite the government. But there will be a little bit of room for wriggling, I think, around the consultation with Treasury around some of the finer details.
Just quickly on a broader economic question, one without notice, but the all awards we've seen hit that record mark. The last time was 2007, and subsequently there was a global financial crisis. Is all this built on a house of cards?
It's certainly built on cheap money from central banks around the world, so I think that's a little bit of a concern. But I'm not so sure the parallels with pre-crisis are the same. If you adjusted it for inflation terms, like the market is actually not really as high as it was back then, and on a lot of other price to earnings ratios, it's a little bit up, but it's not like massively overvalued at this stage. But I think the sort of key thing is what happens with central bank interest rates around the world and it doesn't look like they're going to be going higher anytime soon. So probably that's good news for the stock market, at least in the short term.
That's one we'll be watching closely. John Keogh, thank you so much for your time.
Thanks.